Welcome back. I'm Pratap here. Today is the 17th March 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. Most of you might be knowing it is a highly expensive training course, but we are providing complete free training and all the training lessons are already available at our NeoStock YouTube channel. And everyone can access these training lessons. So at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the Community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. I kept all the training lessons in this YouTube playlist. You just scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions provided at our Telegram channel. I have provided our Telegram channel link in this video description. So please join at our Telegram channel. At the top of the Telegram channel window, you can find pinned messages. And one of the pinned messages will be having all the training instructions. So learn this course according to those training instructions, then definitely you will become a very good independent trader in the coming months. Please make use of this opportunity. Okay, now let's get into the HLQ zone performance evaluation. The last end of the day video, we have identified six high liquidity zones from daily and 75 minutes time frame. And these HLQ zones includes from Nifty also. Nifty is also having a daily high liquidity demand zone. Unfortunately, today also we did not get any trades from these HLQ zones. Did you observe last 3 trading sessions, none of our HLQ zones got a trade execution. Rarely you see such kind of situations. Probably this is the 4th time happened like this for the last 1.5 years time period. It's a rare situation. Like continuously 3 days or 4 days or maximum 5 days, you won't be having any trades execution from HLQ zones. And this happens in a special market situations. The momentum in the market is very low. Or there could be a major trend shift is taking place. Before that, you see such kind of situations. These are the few reasons I have observed from the past. Let us see what is going to happen this time. If you observe Nifty, this is Nifty chart. See, Nifty is having a high liquidity zone, drop, 2 base candles and a rally candle. This is what our software identified as a high liquidity zone. But after that, you see, all the candles are moving in a specific range. They are not coming out of this range. Within the range only all these days. How many trading sessions? 1, 2, 3, 4, 5, 6, 7. Prices are moving here only, within this range. So something definitely will going to happen in the coming days. Maybe tomorrow or day after tomorrow, after a few days, some shift is going to take place in the market. And once the shift changes in the market, we see very huge profits all of a sudden in our HLQ zones. That is what I observed in the past. All of a sudden like 8% ROI, 9% ROI during the intraday trades. Such kind of things observed in the past. But before that, like 3 to 5 days or maybe 6 days, I haven't seen 6, I think maximum 5 I have seen in the past. No HLQ zone trades executed. But we'll see. This is the continuous third trading session. We did not get any of our HLQ trades got execution. Okay, let us see first Nifty, how we fine-tuned this zone. This is a drop, 2 base candles and a rally. This is a daily zone. This daily time frame has to be fine-tuned with 75 minutes time frame. So now we are in the 75 minutes time frame. See, in the 75 minutes time frame here, you have a rally, 4 base candles and a rally candle. Rally, base, rally. The 75 minute zone. This 75 minute zone again fine-tuned with 15 minutes time frame. Let's go to the 15 minutes time frame. Here in the 15 minutes time frame, here you have a drop candle and a base candle and a rally candle. Drop, base, rally. And within this 15 minutes area, again fine-tuned with 5 minutes time frame. Let's look into the 5 minutes time frame. In the 5 minutes time frame, again you have a drop candle, you have a base candle, rally candle. Drop is medium size candles. Medium size candles you can use as a leg-in. That's why drop, base, rally. So this is the fine-tuned 5 minute zone. We are planning our intraday related HLQ zone trades. But today price did not enter. First of all, if you look into Nifty supply demand zone chain, all these are all inside the monthly zone. All these price actions are taking place inside a monthly zone. And we already analyzed this monthly zone long back, almost 2 months back. And after that, this new daily zone is created in the recent time period. I'm going to the daily time frame. See, before this daily time frame, there were high liquidity zones. 5 minutes to 5 minutes high liquidity zones are here. 2 5 minutes high liquidity supply zones are here. Currently, price is moving within these zones. Let's go to the 5 minutes time frame. So here is a high liquidity zone, rally, base to base, rally. And even before that, there is another high liquidity zone here. Drop, base, rally. All these are all identified with the help of NeoStock software, supply demand zone chain. If you look into Nifty 5 minute supply demand zone, we have both these high liquidity zones. Previously, this zone gave very good profits to us. From here. Now this 5 minute zone, high liquidity zone. See, from here it gave a good profit. And again here, a small profit, and today you see, from this zone, how sharply prices moved up. But unfortunately, this is a morning 9:15 1 minute candle. You have seen a big large candle. Maybe I think up to here, the 1 minute candle is there, 9:15. After that, the remaining 9:14, 9:16, 17, 18 candles. Go to 1 minute, you will get clarity. This is the morning 9:15 1 minute candle. Generally, we avoid trades in the morning 9:15 1 minute candle because that is the time gap up, gap downs you see. That's why trade management is not easy. That's why we are avoiding 9:15. So that way we might have missed a good trade from this zone. But zone performance point of view, see how it pushed. And also our software suggested here 5 minutes high liquidity supply zone is there. That is also gone in the morning 9:15 candle. Even you can't go for a short trade here. You can't go for a long trade here. You can't go for a short trade. Maybe you escaped from stopped out trade here. Maybe you missed a very good trade opportunity here. Because everything happened in the morning 9:15 1 minute candle itself. After that, if you want to plan again another trade in the high liquidity zone, here you have a 5 minute supply zone is there, but prices did not reach up to this area. Drop, base, drop. But here some strong order flow is here, somewhere here. Maybe 1 minute or 3 minutes you may find. Let me draw horizontal line here. See, exactly from there only today again prices sharply came down. 5 minute zone it is not clear. Maybe 3 minutes or 1 minute. Maybe some high liquidity zones might be there in this area. This is a 3 minutes zone. Time frame. This is the area. Here also not clear. Go to 1 minute. Is there any high liquidity zone at 1 minute within this area? 1 minute is also not clear. Okay, anyway. Maybe institutions kept some strong order flow here. That's why again exactly from here it came down. The conventional technique analysis who follow like support line, resistance line, those people would have got a trade opportunity here. But that is a quite dangerous concept because risk management is not good in support and resistance related concepts. People use some other techniques, non-related things. They try to correlate and find stop loss and all, but that is not a perfect approach. But anyway, this is the area where you should plan our short trade, and this is the area where we should plan our long trade. Long trade we missed because morning 9:15 this price action is happened today. And one more interesting thing, if you look into morning 9:15 candle in trading view, they add pre-market trade. Go to daily candle, you will understand. Today daily candle. Where market opened today? Market opened with gap down. See, this is the 5 minutes high liquidity zone. See, market opened here. This is pre-market. Before 9:15, pre-market opened here. That way also you can't plan a trade in this area because already market opened below this zone, 5 minute zone. But if you look into 5 minutes time frame, morning exactly 9:15, market opened here inside this zone. And zone pushed. Maybe institutions might have added a new heavy order flow in this area that pushed the market up during 9:15. If that is the case, next time again this zone provides a good trade opportunity. But a daily candle point of view, it looks like this zone is gone. That means pierced. But intraday candles point of view, intraday morning, even if you go to 75 minutes candle, 75 minutes candle open shows here only. Any intraday candle, 75 minutes, 15 minutes or 5 minutes, the open is inside this zone only. So these are some interesting points you should observe. And all these scenarios we discussed in the recent time, either in the Q&A videos or in our HLQ zone analysis videos. I added all those important videos into our playlist. We have a playlist, important strategies and analysis video playlist is there. Go to that playlist. All important HLQ everyday analysis videos you will find in that. Any new topic we discuss, any new interesting chart we discuss, that video I am putting in the important strategies and analysis. And that playlist will be helpful for the members who are expecting to gain more experience. You have to go through all the HLQ analysis videos in that playlist. That way your experience will improve quickly because special scenarios we will be seeing in those videos. We are analyzing some special charts. From those special charts, some new topics you will be learning. So this is a daily zone. That is what happened. Maybe this 5 minutes HLQ demand zone might be acting as a dynamic entry buffer to this HLQ zone. In lesson 21 you learned dynamic entry buffers. Probably that concept you can apply on this. That means this zone is not letting the prices go down. Until this zone is violated, you won't get trade from this HLQ zone, daily HLQ zone. And this daily HLQ zone, we have an excellent fine-tuned 5 minutes order flow is available here. Okay, this is about Nifty. Next one is a mother sun. This is also a daily high liquidity demand zone. If you go to mother sun, this is a drop candle with hidden body. Is a leg in, you have 2 base candles and rally. This one is fine-tuned with 75 minutes time frame. In the 75 minutes, you have a rally, base, rally is there. Okay, within this rally, base, rally, go to 15 minutes time frame. Here also you have a drop, base, rally candle. Drop, base, rally. Again, within this 15 minutes, go to 5 minutes time frame. Maybe drop, 2 base candles and a rally you can drop, but risk is very high. But here, if you observe carefully, the real order flow is from here, rally, base, rally. This 5-minute zone is the origin for this entire 75 minutes fine-tuned zone. Because inside 75, you have 15 minutes fine-tuned. This is the actual origin. That means the real order flow is in this area. Rally, base, rally. You already learned in lesson 22. The very important concept we developed. A lower time frame zone as an origin to the higher time frame zone. This concept is not available in the market. This is the one I developed. And recently we have seen, not recently, for the last 6-7 months, we've been seeing this rally, this lower time frame zone as an origin is giving huge profits. And it is having a very good success rate. Lesson 22 concept. So that's why you can plan your trade here. But today we did not get any trade opportunity from this zone. Prices entered in the zone in the morning 9:15 candle, but not up to this area. Okay, next one is Kalyani Jewelers. This is a 75 minutes high liquidity zone. Sorry, daily high liquidity supply zone. Sorry for the. This is a daily high liquidity supply zone. Let's go to the daily time frame. Our software identified as a rally, base. This is a medium size candle also kept in the base. And this actually, strictly speaking, this is also a medium size and follow through candle. This is the actual leg out. But our software is having intelligence to identify imbalance. Actually, where the imbalance is started. Sometimes the imbalance started in this candle and time is completed, the candle duration. In the follow through candle, you will see continuation of that imbalance. So that's why our software is having extra intelligence to identify recognizing the imbalances happening earlier. So that's why this is the one considered as a leg out. But this is also medium size candle. Why it is not considered, you may ask. The reason is very simple. Maybe this is also imbalance is not fully identified here. See, in the narrow range areas, this is also majority of the time it is within this area. But here, from the narrow range area, it come out from this candle. So that's why our software in an intelligent manner identified. So that is the reason why sometimes you see some medium-sized candles are identified as leg outs because the real imbalances are identified from where it is started. That kind of intelligence also our software is having. That is the beauty of our software. No other softwares identifies such kind of imbalances. Of course, there are very few softwares available in the market about supply demand zones. They developed using some trading view scripts for drawing the zones on the charts. That's it. See, supply demand zone means it's not drawing the zones on the charts, right? Supply demand zones means identifying the zones having a very good institutional order flows. Performing the top-down analysis. Performing bullish and bearish trade setups identification. Finding high liquidity zones, that is most important thing. The zones that are having a huge institutional order flows. The zones that gives you huge success rate. That is the real challenge. And those kind of algorithms we developed. Apart from that, we are also identifying special zones like hidden zones. Our software identifies. Our software identifies the zones based on the dynamic view. Our software identifies the zones with the help of imbalances, the origin where the imbalances are taking place. That way also our software identifies. It's the most advanced software. That's why we are seeing a huge success rate for our software identified zones. Sometimes some zones are looking very tricky for the beginners. Because you are learned only basic concepts as a beginner. Once you listen these everyday HLQ analysis videos, then the advanced thoughts will be developed in our mind. Then slowly your mind shift also will be changing time to time. That way you will be able to identify. You will be able to understand how the actual imbalances are taking place. Because this concept name itself is institutional imbalances, supply-demand zones. Supply-demand zones based on institutional imbalances. Our actual topic is the supply-demand zone topic. There are some other supply-demand zones in the market. They are two basic level. But this is the most advanced one, supply-demand zones based on institutional imbalances. That is what you learned in lesson 2, in the second training lesson, lesson 2. First lesson you have 3 videos, second lesson you have only 1 video. So go through the lesson 2 and understand the imbalances, the real meaning of imbalances. I clearly explained how we are identifying the institutional footsteps through imbalances, institutional imbalances. That's why I always say lesson 2 is my favorite video throughout your entire course, because that is the key for to get the success. If you really understand the essence of what is an imbalance, then the rest of the subject is very easy for you to understand. So such kind of concept our software is supporting. That is the beauty of our software. Okay, this is about Kalyani Jewelers. Okay, sorry. This is how our software identified. So within this area, I fine-tuned with 75 minutes time frame. In the 75, you see, you have a drop. Here, balance is taking place. In this candle, imbalance is taking place, and see follow-through candle. This is the way drop-based drop. So within this 75 minutes area, I identified a 15 minute zone. So you have a drop, 1, 2, 3, 4, 5, 6 base candles and a drop candle. But why I didn't draw here? Drop 1, 2, 3, 4, 5, 6, 7 base candles. And moreover, leg out is also medium size. So this is the actual institutional order flow. This is the area. Okay, but this is not enough. We need to identify 5 minutes fine-tuned zone. Go to the 5 minutes. And 5 minute zone is even more tricky to identify. See, at this proximal line, you are seeing the 5 minute zone. Drop, base, drop. So this is the area. Type 2 proximal level I have drawn so that it is close to this fine-tuned area. And previously, prices came very close to that area and again came down. So definitely this is the area we might be having a strong institutional order flow. But today prices did not get into that area. Okay, next one is Chola Mandalam Finance. This is a 75 minutes high liquidity demand zone. How our software identified this zone? As a rally base and a rally candle. That's why you got a very big zone. And if you go to 15 minutes, the structure I am not comfortable in the 15 minute structure. Here you have a drop base rally is there, but this is violated here. So not valid. And here pro gap area, this is from the pro gap area. So because the zone is originated from the pro gap, you can't find any LTF zone. There is no possibility. Because pro gap area only order flow will be there. Pro gap area you can't find the zone. Before that, I thought of drawing a zone here, but failed ERC, base candle, rally. This base candle structure again I am not comfortable. Is it a base candle or failed ERC? Still, I tried drawing a zone. I already did compromise, because sometimes you can compromise and you can draw the zone, right? So that's why what I did, I try to draw a zone like this, and when I looked into the 5-minute structure, it's not clear. See, earlier why I have drawn is it picked up the orders from this area and moved. So I want to see where exactly the fine-tuned zones are there. But the moment I saw, I'm not really comfortable here. All these zones and all. Okay, you have a failed ERC rally. You have, these are also large candles. Still, if you want to draw 5-minute zone, somehow I'm not. Maybe you can draw a zone like this. Already tested. This is the area. Majority of the portion went outside the zone. Maybe type 3 proximal also you can draw. That way also type 3 is also tested here in this candle. So that is the reason why finally it doesn't have any fresh zone. So I decided, okay, better to leave this for time being until a new order flow is created and push the prices up, or otherwise the zone will be violated. So this is the reason why I left my analysis without drawing this. But anyway, today prices did not enter into this zone. So next one is Paytm. This is also 75 minutes high liquidity demand zone. Paytm, how our software identified? As a drop candle, 1, 2, 3 base candles, medium size drop candle, and everything is part of the base, and a rally candle. Maybe some of you may say, this candle looks like a drop candle for me. I want to consider a leg out. See, software do the calculations much accurate than human. Why human way of calculations is not so accurate is the scaling problems on the charts. Software don't have those issues. Because software only look into the values. It won't look into the scale. Because software is not calculating the chart. Software is calculating the values. So that's why sometimes, see, now it is looking like a medium size candle, right? But if you see, all of a sudden now it looks like a drop candle. See how our view is changing. Depending on zoom in, zoom out. So that's why this is a drop, 1, 2, 3 base candles, one medium size candle is also part of the base, and a rally. So our software identified this zone. And this one you need to fine tune with 15 minutes time frame. And 15 minute structure, again, I am not really comfortable in this structure. But here you have a 15-minute zone overlapped. Look into this 15-minute zone. You have a rally candle. You have 1, 2, 3, 4, 5, 6 base candles, rally candle. Or you can also say, you can consider this as a rally, and that way you can draw 2 base candles and a leg out candle with pro gap. This way also you can draw, but I am convinced, okay, all these are all base candles. I have drawn this as a rally, 1, 2, 3, 4, 5, 6 base candles, rally. This is the 15-minute zone. This 15-minute zone is overlapped with this 75 minutes high liquidity zone. What is this concept? Lesson 22. Lower time frame zone as an horizon to the higher time frame. But 15 minutes overlapped, is it good enough? No. The actual trade should be in the fine-tuned 5-minute zone of that lower time frame zone horizon, that is 15 minutes horizon. So that's why you need to identify 5-minute zone. Let's go to the 5 minutes. We are in the 5 minutes time frame. Now inside this 15-minute zone, you see, excellent. You have a rally candle, you have a base candle, you have a rally candle with pro gap. And this 5-minute zone, this is a fine-tuned 5-minute zone inside the 15 minutes horizon. And from this 5 minutes also, the orders are picked up and then entire 75 minutes high liquidity zone is formed. That means this is a real horizon. Apart from that 15-minute horizon, you can also draw one more zone like this. This might be acting as a trap. Bear trap. In case if this horizon is violated, then it will pick up the orders and move. Why? Because this is also a fine-tuned zone inside 15 minutes horizon. This is a drop-based rally. But this is the actual horizon. Fine-tuned 5-minute zone. See, from this area only it picked up the orders. Went deep inside the 5-minute zone and then again pushed and a big leg out candle formation, and that way your entire 75-minute zone is also completed. Go to 70. See this? Picked up the orders from this 5-minute zone and then entire leg out, 75 minutes leg out. So definitely this is the area we have a strong institutional order flow. And new orders will be added as part of imbalance. That's why we can plan our trade. If this is violated, below a trap is there. The trap is also a fine-tuned zone of 15 minutes horizon. So we have 2 order flows. But anyway, today price did not enter into this zone. We did not get the trade. And the last one is Power Finance Corporation, PFC. This is also a 75 minutes high liquidity zone. Our software identified this as a rally, 1, 2, 3, 4 base candles and a rally candle, rally base rally. And this rally base rally 75 minute zone is fine tuned with 15 minutes time frame. Go to the 15 minutes time frame. So in the 15 minutes time frame, you see you have an excellent drop base rally. This is the fine tuned 15 minute zone. And inside this 15 minute zone, you should identify a fine tuned 5-minute zone. Go to 5 minutes time. So in the 5 minutes time frame, you have a drop candle, you have a base candle, you have another medium sized candle, maybe base only you can add, or maybe it might be looking a little bigger than 15 minutes. If you feel like that, you can draw a zone like this. Drop, base, rally and follow through. That way you can think, but actually I'm convinced this is 5 minutes. But risk management point of view, maybe I can plan my trade like this. Because if you draw like this, risk might be bigger. Sometimes risk maybe I didn't exactly look into the risk, but sometimes this risk might be beyond 2%. If it is within 2%, okay. If it is beyond 2%, you can plan your trade like this. Or you can plan even in type 3 proximal also. It's up to you. But type 3 proximal, many times you may miss the trades. See, ultimately, the thing is risk. Your trade should be within your accepted risk. If you don't accept a 2% risk, then you have to plan your trade in 1.5% risk. Even if you don't accept 1.5% risk, maybe 1.2% risk you can plan. Even that also you feel high, 1% risk level you have to plan. But you reduce the risk more and more. What is the problem? There are higher chances you will be missing the trades. Rarely your trades will be executed. Sometimes before your stop loss is hit, your trades will be executed. You have such kind of issues will be there. That's why properly you have to balance. That's why experts analyzed all the historic data and finally they identified 2% risk is the ideal scenario. But many of our HLQ zones from the past history we have seen around 1.2 to 1.4% majority of our trades are getting executed. Okay, so PFC also we didn't get any trade. Today price entered into the zone, morning also, but they didn't reach up to this fine-tuned area. Sorry, this is a long back. This is 11th March. So this is the one today. Today prices entered, but they did not. Actually, I looked into this, whether there is any new 15-minute zone is created here. But see here, there is no 15-minute zone in this price movement. It is a drop candle, big candle, and then rally candle. Okay. So these are the high liquidity zones from our previous report. Hope this information will be useful to you for the people who are expecting to gain some knowledge and expecting to become experts in drawing the fine-tuned zones. So let's all meet again in our next video. Thank you.